Hey, what's going on, guys? Here's a strategy that will make you billions. Yes, billions. Now, I'm just kidding. Obviously, you can make billions if you have $1 billion account, but the simple and easy strategy that I'm going to show you in the way you can do your top-down analysis. This is going to be the easiest top-down analysis you will see on YouTube. So follow up, focus, and let's just jump into it. So, we have GPP, JPY on the screen. We have GJ on the screen. Now, start always higher time frame. You hear me say this in every video I post. Start on the higher time frame. Now, when I say start on the higher time frame, I don't mean go back years go back years in time. What I'm trying to tell you is look at recent higher time frame analysis. That's what I mean. Look at the recent higher time frame analysis. So if we look at the recent, just this section here, what do we have? We have a high, low, a lower high, because this high is lower than this high, and now a potential lower low, right? But for that to happen, of course, we all know the market moves in waves. It doesn't just shoot. It might do something like this, form another lower high, and then another lower low, and then another lower high, and then another lower low, and so on and so forth, right? This is basically the smaller time frame structure within the overall higher time frame structure, right? Because there is market structure within market structure. So what you can do to find easy setups and easy trades, and because find setups, and you have to know where you are at all times. You have to know where you are in the market at all times for you to be able to make money. So now I know if I look very closely to really recent market structure is we have a high, low, and a lower high. So now I know we are in a lower high. What that means is there is a very high probability that the market comes down and forms another lower low, and then a lower high, and so on, right? That's simple market structure. So if we know where we are on the higher time frames, such as the daily, weekly, and so on, what I want you to do on the daily, this is the easiest technical analysis you'll see. This is the easiest way to do your technical analysis on your charts. If you do this and you master this the way how I'm going to show you now, you will become super profitable within a very short amount of time. So here's what I want you to do. I want you to grab this horizontal ray and place a ray at the highest point the market made, right? The highest point the market made, and the lowest point the market made, right? Boom. So look how I squared down the price to within this section, in a section, right? So now we know on the daily time frame the market has come down and formed us and gave us a lower high, right? So I drop down to 4-hour time frame. Once I'm in the 4-hour time frame, there's a few things that you can do. One of them is obviously you can pull a Fibonacci if you want. You can pull a Fibonacci, take it from the highest point to the lowest point, and you can see here we have a rejection of this zone, right? The market came into the 61.8 and just shy short from the 78.6 and started wicking, showing rejections. Also, if you want another confluence, market reacted to this order block over here. If you trade smart money concept, let me delete this one so you can see it very clearly. You see how the market came all the way up into this supply area, order block if you prefer to say order blocks. To order block, supply areas, all the same thing, to be honest. So market comes up and then wicks and shows rejections, basically distributing in the smaller time frame, and then selling off, right? So one, you could have took a trade based on these wicks, and possibly after this bearish engulfing, you could have taken a trade within these wicks, anywhere around here, and you could have took it for, I don't know, 50, 70 pips. So that's one thing you can do, right? But if you're a swing trader, you could have taken a trade, let's say a short, after that bearish engulfing. You could have had your stops just above and targeting TP1 and the negative 27 for TP2. Simple as that, guys. And you would have been in profit now. You could have been holding it for that whole of this week. But how do we find a trade right now in the market? Sometimes the market doesn't present you with a trade, so you have to wait. Because if the market was still down here, it's too messy, it's too choppy. Yeah, it's going up, but you know, I'd rather be sure. I'd rather be 100% sure about where I am in the price in the market and where we're at that specific time. So there's a few things you could have done. Also, you could just adjust that so you have a very clean chart. Going down to even smaller time frames such as the 1 hour, what you could have done here is could have thrown a moving average on. You know, why not? Could have thrown even 2 moving averages on. And after that moving average cross, and you could have taken another trade after the moving averages had crossed. You see we have a bearish engulfing, moving averages crossed. Let me zoom that in for you guys. You see market crossed, moving averages cross over. You could have entered a trade based on this wick and then wrote it down. Obviously consolidated a little bit, but then eventually, because we all know where we are at the higher time frame and there's a huge possibility that the market might come back and give us another lower low. That's just based on looking at the daily time frame. This is it, guys. This is the easiest and the most simplest way on how you do your technical analysis. Literally super easy. Horizontal ray at the highest point the market made on the daily. So let's just do a quick little recap. First things first, what you do is you throw in a horizontal ray at the highest point the market made from the wick to the lowest point the market made on the daily to the wick, from the wick to the wick. What you can do is then throw a Fibonacci on there to see where you are at all times and on which PRZ level the price is trading at, right? That's second thing you can do is throw in a Fibonacci. Fourth thing you can do is drop down to smaller time frames such as the 4 hour, and I really like 4 hour supply and demand areas because they are most likely to get respected than a 1 minute supply area or a 1 minute demand area. See, the higher the time frame is, the more solid it is. So what I would do is mark my supply and demand areas, order block, whatever you want to call them, and then try find a trade from there. So you could have taken a trade from here just based on that rejection in the supply area. You could have also taken the same trade based on that the price has now sitting at a PRZ level and rejected of the 61.8 Fibonacci. That's another confluence. Another third confluence. Let me remove the Fibonacci so you guys can see the charts for what it is. Another confluence you could have had is take your triangle and see where price stopped before in the past, right? Now we can see this area right here, this whole zone was respected. It was used as support, resistance, and now resistance again. So we have a resistance area, we have a supply area, we have a Fibonacci PRZ level. All these confluences are telling us to sell. Why? Because we know on the higher time frame in the daily range, this is your daily range. The market came down, gave us a low, and now gave us a lower high, right? So knowing that we are at a lower high, there is a more chance for the market to sell than to continue to buy. And how we know that? We know that the market has already formed a lower high here from this high over here. So we already know we're in bearish market. We're in a bearish market, right? So after you do that, guys, what you can do is drop down to even smaller time frame to find your refined entry, such as, I feel like the 1 hour is a perfect time frame to enter, just because you're most likely, you're less likely to get faked out by smaller time frame bearish engulfing, and then you get a very nice another fake out to the upside or another wick. But after this 1 hour bearish engulfing and the moving averages have crossed, I know now the price is trading below the moving averages. Could have entered a trade right there, stops just above 30 pips, and you could have targeted this low for 1 to 3, or you could have targeted the next psychological level, which is 155 there, or 154, and you could have targeted like levels. You could have taken partials all the way through. So you see how easy this is, and how there's almost nothing on my charts but 2 horizontal ray, a little supply area. That's all you need to really make money in this market. If you make it complicated, it will be complicated. If you make it simple, it'll be simple. And I hope you guys enjoyed today's video. If you did, please like, comment, subscribe, and I'll see you in the next one. Peace.